Generally, the company will collect money in installments for the benefit of its shareholders. The first installment is known as application stage, the second installment is known as the allotment stage, and third is known as the call stage. Is allotment is a call? Yes, even allotment is a call because we call the shareholder to pay the allotment money. After allotting the shares, allotment comes. Only on allotment, share application money will be transferred to share capital. Real allotment happens in share application stage. Once company allotted the shares, they have the right to call and collect the money. Once a shares has been allotted, shareholders are obligated to pay the remaining balance. Don't think that allotment happens only in allotment stage. His call is a call? Yes. His application is a call? No, because we collect the money and allot the shares. Sir, when can you say call? When you pass the due entry first and then collection or receipt. So what do you mean by calls in arrears? Amount called but not paid by the shareholders on the due date is called as calls in arrears. Assume the company is calling for allotment money. When company need to collect money from a number of shareholders, there is always the possibility that one of them would not pay on time. They will pay later but not right immediately. Dear students, you might ask, when do calls in arrears occur? In most cases, calls in arrears occur during the allotment or call stage. Why not in the application stage, sir? In application stage, we are inviting the general public to subscribe the shares. If they buy the shares, then only shares are allotted. Sir, what will be the accounting treatment for calls in arrears? When an installment is not paid, either on allotment or call, the relevant installment collection entry should be debited. However, the due entry should not be altered. Dear students, we will start with a problem to get a better understanding of accounting treatment. KGF Limited issued 10,000 shares of Rs 10 each at par. Company is collecting money in installments. Application Rs 3, allotment Rs 2, call Rs 5. All the money due on shares were received except call money on 1000 shares. Past journal entries. Dear students, when application money is received from the general public, the journal entry will be bank account data to share application account. So bank account should be debited with number of applications received into application money per share. Number of applications received 10,000 into application money 3. So 10,000 into 3, 30,000. To share application account 30,000. Only on allotment, share application money will be transferred to share capital. So what will the general entry? Share application account data to share capital account 30,000, 30,000. Once you pass this entry, applicants will become shareholders. Allotment happens in share application stage. Next, share allotment money due entry. For the due entry number, share allotment account data to share capital account. So share allotment account should be debited with number of shares allotted into allotment money to be paid per share. How much now? 10,000 into 2, 20,000. Share allotment account data 20,000 to share capital account 20,000. Collection of allotment money or receipt of allotment money. So general entry bank account data 20,000 to share allotment account 20,000. All the money due on shares were received except call money on 1000 shares. When an installment is not paid, the relevant installment collection or receipt entry should be debited. However, the due entry should not be altered. So what is the general entry? Share call account data 50,000 to share capital account 50,000. Share call money received general entry. Dear students, every shareholder paid, or is there any calls in arrears? Yes. All the money due on shares were received except call money on 1000 shares. Now, will you receive amount for 9,000 shares or 10,000 shares? Only for 9,000 shares. So bank account should be debited with 9,000 into how much now? Call money 5 rupees. So 9,000 into 5, 45,000. Bank account data 45,000. Listen, if a shareholder fails to make a payment either on allotment or final call, it should be transferred to a separate account known as calls in arrears. So calls in arrears, how much na? 1000 into 5. How much? 5000. Calls in arrears amount is a receivable. It is an asset. To share call account, 50,000. General entry for calls in arrears, money received. Bank account data to calls in arrears account. Listen, my dear lovable students. Apart from paying the calls in arrears, shareholders have to pay the interest to the company from the date call money was due to the date money is finally received. As per Companies Act 2013 Table F prescribes maximum interest rate is 10% per annum on calls in arrears. However, directors have the power to waive off general entries for calls in arrears. For interest receivable on calls in arrears, shareholders account data to interest on calls in arrears account. For interest received, bank account data to shareholders account. The net entry will be what, Nana? Shareholders account debit, shareholders account credit, debit credit cancel. What is the net entry? Bank account data to interest on calls in arrears. Interest on calls in arrears is income from viewpoint of company. Dear students, I hope you enjoyed the concept of calls in arrears. Please consider subscribing and click the like button. It will encourage me to create more great stuff. Bye for the time being.